Asian midline. Okay, so yeah, now this right here is a lot of liquidity, right? We have the Asian session liquidity that has been unswept. Okay, and yeah, look at this, look at this. Where did this move come into? Right into the Asian midline.
Mm.
Okay, right into the Asian midline. There are some liquidity getting built up right above that, and you know QM levels, right? Yeah,
Yeah,
yeah. So see, this was even a QML.
yeah.
All of that confirmations. Okay,
Retail head and shoulders
yeah,
inverted, right?
yeah. Inverted head and shoulders.
Yeah.
Okay, you can even call it that way. Okay, so then if you look at this now, imagine how much of stop losses are resting below that low. Now this might even be a strong low. Why? Stop hunt breakout structure, but then again, how much of liquidity is resting below that low? Like you have to be flexible, right? You have to be
Hmm.
flexible. How much of liquidity is resting below that low? Okay, so when everyone else is going to do this, unaware of this liquidity, what are we going to do? We're going to look for something below that. Now when I say something below that, we're not going to take this as the inducement and look for this to play out. Okay, we're not going to wait for this to play out, because look how far away that is.
Far, yeah, it's too far
Yeah,
down. Yeah.
30 pips away from your liquidity. Okay, so if it takes out this low and then drops for 30 pips, then the ones that had their sell stops here would be in deep profits. It's not
Yeah.
even a manipulation. Okay, it is not even a manipulation. So if
It
it's a
doesn't work for the
manipulation,
bank at that
yeah,
point.
it doesn't
Yeah.
work that way. Okay, so if it's a manipulation, it has to be quick. It has to be quick. So right below that low, you can see, if you take a closer look, from the high of this wick to the low of this wick, what's that? An
Mhm.
imbalance.
Yeah.
See that? Now these are not random stuff. Okay, they always do this on purpose, because now they have a cause for lower prices. Once again, they have a
Mm.
reason to run below these lows, right? Because why? There's an unfilled imbalance.
Yeah.
Okay, there's an unfilled imbalance. So personally, this is how I would define it. That's it, into this wick. Okay,
Mm.
my entry would be right here, and my stop loss would be at the closing of the candle that has the imbalance, like this. Okay, now this is how I would personally define it. I did not take it from anyone else. This is how I would personally do it, like this.
Mhm.
Okay, like this. So when everyone else is wanting to buy here, I'm buying it right where they're placing their stop loss.
Really buying cheap.
Yeah,
Yeah.
okay, so I'm really buying shit now right here, and
Yeah.
I'm targeting that high itself,
Yeah.
like this. Okay, so now look at this. Why is it very high probable? Look at all of that liquidity that's being fed into my entry. So
Yeah.
much,
Yeah.
right? Okay, we can just laugh at the retailers now. Okay, laugh at the uninformed traders. Okay, because they have no idea what's going to happen now. They'll think, okay, now this is what you get taught, right? And when you backtest, you might even see it is working out. Stop hunt, it has an imbalance and it has broken structure, very high probable point of interest, and a doji, and a doji. Okay, supply
Mhm.
and demand traders love these dojis. Okay, and then, okay, what happened? Okay, what happened? Bam, here we have the rejection. Okay,
Yeah.
they got taken out. Okay, they got taken out, but we are in the market. Okay, we are in the market right here. Like, see, this is how you know you got the proper entry. If you get the right entry, it does not stay there. Okay, it flies. It
Yeah.
flies. See, instantly you have, I think that's around 40 pips. Yeah, 40 pips instantly. Okay, so now what can you expect? Now, if you look into market structure, you can see higher highs, higher lows, higher highs, higher lows, higher highs, and a false breakout structure.
Yeah.
Yeah, see that? A false breakout structure. Now, where are the stop losses now? Right above that high. Why? Now people are expecting retracement and a sell, right? Because that's a breakout structure. Okay,
Yeah.
that's a
Yeah. Yeah.
breakout structure. So people are expecting a retracement and a sell. So what they would do is might go to lower time frames. Okay, mark out this. Yeah, I'll have to refresh this now. Okay, give me a second. Yeah, trading views lagging for some reason very lately. I don't know why.
It's a little glitch. Yeah. There you go.
Yeah. Okay. So now people, what they would do is they will mark out these order blocks. Okay, they might mark out these order blocks and all of that stuff, and they will expect sells from that area, right? They're going to
Mhm.
expect sells from that area. So let's go to the 4 hour and let's see what's happening. Okay, shooting up. Okay, it's inside of the point of interest, and then look at the drop. Okay, now it's starting to drop. Now it's
They give
starting to
you a
drop. Now the
reaction.
thing is, yeah, it will give you a reaction. Now, even I did take a sell here. Okay, I took a sell here. Okay, because I
Mhm.
have to be frank. I took a sell here, but okay, exits are more important than entries. Okay, that is
Yes.
what you should understand. Okay, you have to always know where to exit, because anyone can enter anywhere, but where are you going to pay yourself? Okay, what if you take a sell here and you're expecting all of this stuff to get taken off without even
Yeah.
taking partials? Okay, so that's dumb. Okay, that's dumb. You have to know where to pay yourself. So what I did was I just took my profits from this imbalance. That's it. Okay, I'm done. I'm done. I don't even
Mhm.
care if it drops. I'm done. Okay, I have taken a major portion off because look at this. Okay, always make sure you look into the bigger picture. Look at this retail resistance. Look at the
Yeah.
retail resistance. How
Yep.
much of liquidity? Okay, or else how many people are shorting this thing, thinking that this right here is a strong resistance because every single time price comes into that level, it drops. See that?
Yep.
Comes and it drops. See? Now, what will people expect? It comes and then it drops. That is what they're expecting, right? That is what they're expecting. Okay, so now what happened was when price came into this 1 hour order block, okay, you even got a breakout structure.
Yep.
Breakout structure. Okay, you got a breakout structure. Now, what people will do is, yeah, now we know that in these types of candles, the volume is in the body. So they'll mark it out like this, and they will expect retracements and a sell, right? They're
Yep.
expecting a retracement and a sell because why? That is what you get taught, right? That is what you get taught. And
Yeah. Yeah.
then, yeah, what happens?
It's
Price is
funny.
going
It's
up.
funny because now that you're showing this, is like, I mean, there's the logic behind what they teach, and you back
Yeah.
test it, and most of the times it works. And as I told you, right, I even have a Discord mentorship in which that's
uh,
what you teach, because I mean, in some way it kind of works, but you're really not being the smartest guy
that's the
in the.
thing.
Yeah.
That's the thing. Okay, now this is the real smart money. Okay, this is
Yeah.
the real smart
Yeah.
money. Like advanced smart money. Like I'm not telling like I'm perfect at this. No, I do take losses. Okay, I do
Yeah.
take
Yeah.
losses
Yeah.
because yeah, now these are the trades that I take. Now everything that I'm about to show you today, you can just go to my channel and check that out. Okay, everything is there. Everything is clear. Okay, I'm not just cherry picking some setups and showing that to you. No, okay, it works pretty much every single day. Okay, because you would have seen it, like I post a setup every single day. I have an entry every single day because now most of the people they just post a setup only like once in a week. Even intraday traders only
Yeah.
once in a week they have a nice setup. But no, for me I have an entry pretty much every single day. Every single day. Like some days I miss, but yeah, most of the days I will have around 2 to 3 setups. Okay, because yeah, this is what goes on. Okay, and since price is fractal, the same stuff happens on a lower time frame. Okay, so you can play with the lower time frames too. Okay, so yeah, what happened? Now price is going up, and look at the rejection. Look at the rejection when price gets into these levels. Okay, why? Inducements.
Yeah.
Inducements. Okay, it's dropping. It's dropping. Okay, more and more traders are getting in. More and more traders are getting in. But we know that this right here is a pool of liquidity. See that? That's a pool of liquidity. We're targeting that now. Okay, we're targeting that. We're not. Now, if they really want to do a reversal, why would they leave this liquidity unswept? Okay, doesn't make sense for them to do that, right? Doesn't make sense for them to do that. Okay, and then, yeah, once again, what did I tell you? I told you a high probable point of interest will have liquidity resting below it, right? So
Mhm.
now look at all of this liquidity. So if this is liquidity, look for a point of interest above that. Okay, it's going to be high probable. So can you see there's an imbalance left? See that?
Yeah.
There is a little imbalance left. So you could use that. Now, you might be wondering why I'm not using this imbalance because on most of the brokers, this imbalance was actually filled. Okay, this was the one that was not filled. Okay,
The
this
higher
was,
one. Yeah.
yeah, the higher one. This was filled on most of the brokers. And if
Yeah.
you know ICT, this right here was a rejection block too.
Yeah.
Okay, yeah, I'm sorry, not a rejection block. I'm sorry, it's a mitigation block.
Hmm.
Okay, it's a mitigation block too. I'm sorry for that. Okay, yeah. Okay, so now we have the rejection, I'm sorry, we have the mitigation block, we have the imbalance, and most importantly, we have liquidity resting right below that. Okay, we have liquidity resting right below that. And then what happened? Okay, shooting outside now. Okay, they're shooting outside. And what happened now? Now look how helpless the smart money traders are actually. Okay, they wanted to buy from this high probable order block, stopped out. Okay, then they thought, okay, now let me sell it with a confirmation when price comes here. Okay, got the breakout structure, let's sell it here, stopped out. No idea what's going on. They have no idea what's going on. Okay, and some people, the ones that are using support and resistance, might say, okay, now a strong resistance got broken, now it might turn into support, so let's buy it here. Okay, expecting moves like this. But then what happens? Okay, what happens? Now they're starting to come down. Okay, now they're starting to come down, and then we have the proper breakout structure. See that?
Yeah.
And then we have the proper break. Why? Now, why can we consider this as a strong high? Because look at how much of liquidity that got wiped,
Yeah.
clapped. Okay, everything got taken out. Now, what you can expect? Okay, when you get this breakout structure and the strong high, your eyes should directly go into the candle that took out the liquidity, like this.
Yep.
Okay, so a higher time frame order block is a lower time frame breaker block. Okay, so on the one hour, you have it's
A
right
little
here.
breaker right there.
Yeah, a little breaker. Okay, so you can have that marked out. Okay, you can have that marked out. And then, okay, what can you do if you missed it here? You can expect retracements. Okay, and then a drop. It comes down. Okay, then it comes down. So this is how liquidity gets built up and how it gets taken out. Okay, so if you took that sell here, you're still in profits. See
Yeah.
that? You're still in profits. Okay, for around 700
Mm.
pips. Okay, so like, see how picture perfect this is. The same stuff happened here. Okay, see these fake order blocks, these fake reactions, but eventually they just went to, yeah, they just completed the draw on liquidity. Okay, so the same thing is what happened here. Okay, so it makes sense, right? I hope it's clear.
Yeah.
Yeah. Okay,
Completely clear, man.
perfect. Okay, then let's get into market structure and trading ranges. Okay, because if you understand your current trading range properly, yeah, that's it. Okay, that is all you have to do. If you understand the proper trading range, you will always have the proper directional bias. Okay, you will always have the bias. That's it. Okay, you're going to have the bias. So let's see how we can look into the trading ranges. Okay, so yeah, do you have any questions about this? No?
So far, so clear, man.
All
Yeah.
right, perfect. Okay.
Can you just maybe give me
Yeah.
1-2 minutes to go to the bathroom? Be back.
Yeah, I'll just have
Yep.
some water. Come, okay. Give me a
Okay.
second.
I'm gonna stop recording and be back. Thanks.
Okay. Can you hear
Ready,
me?
bro. Ready.
Okay. Then let's get into trading ranges. Okay, because now constantly marking out your current trading range will be very important. Okay, it will be very important because now let's think of it. Now let's assume that, yeah, now just for example, let's say from maybe, yeah, let's say from here to
Ooh.
here is your trading range. Okay,
Mm.
so all you have to focus on is this trading range. Okay, and you don't even bother about what's happening here. Okay, you
Yeah.
don't care. You don't care about what's happening here. You don't care about what's happening to your left. Okay, nothing. All you care about is your trading range. Okay, so yeah, now marking that out properly will be very important. Okay, so now let's get into it. Okay, so now when we say market structure, now everyone will be like higher highs and higher lows, right? But if it moves this clearly, then everyone is, yeah, then everyone is a millionaire by now. Okay, if it moves this clearly. Okay, so it does not happen that way. Okay, it does not happen that way. But if you know the logic behind why these higher highs and higher lows are getting formed, okay, yeah, then you know how to trade it. Then you will know how to trade market structure. Okay, so let's see. Now let's say price is going up like this. Okay, so let's say price is going up, creating higher highs and higher lows. Okay, so yeah, now whatever I tell you here is applicable on any time frame. Okay, because price is fractal. Price is fractal. Okay, yeah. So what you should understand is that after every single breakout structure, a new trading range will get created. Okay, after every single breakout structure, a new trading range will get created. So we had this breakout structure, and then we had this breakout structure. Okay, and then we had this breakout structure. Then what happens? What's your current trading range? You had this low right here to this high, and now your current trading range would be from this low to this high. Okay, this is your current trading range. So what are you gonna now? I'll show you how to confirm and all of that stuff, but yeah, as of that for now. Now, how do you confirm? Okay, now what are you gonna do once you get your current trading range? You're gonna look for discount and premium price. Like you know about discount and premium prices, right? Yeah.
Yep. Below 50,
Okay.
above 50. Yeah.
Yeah. Okay. So you're gonna mark out your discount and premium price. So you can take your gun box or your Fibonacci or something and then draw it out from the range low to the range high. Okay. And then yeah, it's like a normal market. What would you do if you want to buy a product? You're gonna wait for the price of that product to decrease, right?
Yeah.
Okay, so same thing here. Same thing here in the market. You're going to wait until the price decreases, until it comes into a cheaper price. Now, when I say a discounted price, now it doesn't have to necessarily come into the 61.8 or 78.6. No, no Fibonacci retracements are required. If it just taps the equilibrium, that would be enough. Okay, just a little tap into the equilibrium would be enough. So yeah, a high probable bullish point of interest will always come from the equilibrium, or else anything below that, anything. Okay, anything below that. And like, doesn't mean that price can't buy from a premium. Now they do whatever they want to do. Okay, they do whatever they want to do. Okay, now if they want to come, they will come here. If they do not, they'll just move it from here. Okay, so
Mhm.
we can't help it. Simply, we're not going to take this trade because it's not about trading every single move in the market, right? It's about trading the high probable ones.
Yeah.
Okay, so if it just moves from here, okay, that just let it go. Okay, we don't care. Okay, we don't care. And then, okay, so let's say we have this, because keep in mind, you cannot swing a buy from a premium price. That's the thing. Okay, you can't swing a buy from a premium price. It has to always come from the equilibrium or else anything below that. Okay, so yeah, let's say we had that marked out and now price is coming down. Okay, so it's coming down now. What's the other reason it's coming back down? Okay, what is the other reason they're coming back down? It is to come into a, yeah, discounted price, that's fine, and it's to take out the internal range liquidity. Okay, the liquidity that is resting inside of this trading range. Okay, that
Yeah.
is the internal range liquidity. Now, what is this internal range liquidity? It could be anything. Now you can see on the same time frame itself, you can see swing lows getting formed. Now, you know the three candle formation for a swing low, right?
Yeah.
Yeah, like it has to have a higher low to left, higher low to right, and the middle candle becomes your swing low. You know that, right? Because that
Mhm.
will be very important. That is where the breakout traders will have their sell stops at. Okay, so
Mhm.
yeah, the swing highs and lows will be very important. So now there will be swing lows inside of the market. So those will act as internal range liquidity. Okay, internal range liquidity. So keep in mind, a drop in a bullish market is a hunt for sell stops.
Yeah.
Okay, a drop in a bullish market is a hunt for sell stops. And what is the internal range liquidity? Not only this, okay, not only this, we might have unfilled imbalances.
Yeah.
Okay, we might have unmitigated order blocks or something. Okay, all of those areas are, yeah, internal range liquidity. So price comes down, clears out the sell stops, or it takes out the internal range liquidity. And after taking out the internal range liquidity, where will they go next? External range. Okay, so you can expect a move like this. Okay, from internal range to external range. As after taking our sell stops, they will go after the buy stops. Okay, so this is how higher highs and higher lows are formed. But how do you confirm that a trading range is created? Okay, there has to be a way to confirm, right? Because it's not clear as a drawing. Okay, there has to be a way to confirm it. So it's like this. So let's say it came into a discounted price and gave you somewhat of a strong low. Okay, stop hunt and a
Mhm.
break. Now, for you to confirm that this is the low of the trading range, this break isn't enough. Okay, so let me draw the swing points too. It has to give you a break out of this trading range, okay, of this previous higher high. So once you get a break out of this higher high, then you can confirm that this is the low.
Yeah.
Okay, but how do you confirm the high? You have to get a break of structure in the opposite direction, like this. Okay,
Mhm.
you have to get a breakout structure in the opposite direction. That is what confirms your trading range from here to here.
Yeah.
So this is the higher high, higher low, and then the higher high. Okay, you have to get a breakout structure in the opposite direction. Now, when I say breakout structure, I want a three candle formation to get broken. Okay, a swing low to get broken. Now, breaks like this cannot be taken as breaks. Now, this is not a break.
Yeah. No.
Okay, because yeah, it never created a higher high. So it has to create a higher high and then break.
Yeah.
Okay, so that is the important thing. So once you get that, you have a trading range. Now, most people, the common mistake they do is they, like, as soon as price breaks out of this, they'll mark this as their trading range. They'll take this as their discount and premium price, and then price will come here and go up. Okay, then they'll
Yeah.
be like, oh, it went from a premium price. Okay, it went from a premium price, but no, it did not go from a premium price. Actually, it did go from a discounted price, a discounted price of this trading range.
Yep. The
See
small
that?
one.
Okay. Yeah, the small one. So what you could do is, see, that's why I told you, after every single breakout structure, a new trading range will get created. So from here to here is your trading range, you can buy it here. So after this break, from here to here is your trading range, you can buy it here. So if you know the higher time frame direction, until price gets there, you can use the lower time frame trading ranges to stack up the entries. Okay, you can use them to stack up your entries. Okay, so this is how trading ranges are created. Okay, so this is how you confirm it, like this. Okay, this is how you confirm it. It's clear, right? I hope it's clear. Yeah. Okay, and then let's assume something like this happened. Let's say price is going up and you had a breakout structure right here. Now this is when it gets interesting. Okay, what is your current trading range? It's from here, right? From here to here. So you have to always pay attention to your major breakout structure. That is what's going to give you the proper bias. So what's your major breakout structure? It's still bullish. Yeah, it is still bullish. So this was only a minor break. So what is the higher low supposed to do? It's supposed to create a higher high, right? The higher low is supposed to create a higher high. So if this is the higher low, it has to create a higher high, right?
And
It has to create a higher high. Yeah. So how do we know this right here? This is the confirmation that this low has failed to create a higher high. Okay.
It's gonna be
so
taken.
if it, yeah, exactly. So if it fails to create a higher high, this turns into a weak low. Okay, then this turns into a weak low. Now, most of the people, what they do is they will look for confirmation entries from here. Okay, they're going to look for the confirmation entry from here. Okay, now will it work out? No, it's a weak low. It's a weak low. Okay, so why would you buy from a weak low, even though we have liquidity being fed into that? Okay, so what we are going to do is we're going to use that as the inducement and then look for something below that.
That's the fuel for the liquidity now.
Yeah, okay, now that's the fuel. Okay, so now we're going to look for something below that. Okay, now this, what's your current trading range? It's from here to here, right? We are still inside of this trading range. So now price might drop down and clear out this liquidity. So when price comes here, if this is your trading range, where are we currently at? An extremely discounted price. See that? An extremely discounted price. So this is like a VIP pricing for the institutions. Okay, it's like a VIP pricing. So when they get here, they do not want the retailers to enter here. They will quickly move outside of the trading range. These moves will be very quick outside of the trading range, like this. Okay, so yeah, this is pretty much what happens. So then we had this break. So we have our trading range from here to here. Okay, higher highs, higher lows, and then a higher high right here. So everything that happened inside of it is just internal structure. It was only to like trap people, only to confuse people. Okay, they're building up all of this stuff. So it makes sense, right? I hope it's clear. Yeah. Okay, so
Completely
this
clear.
is, yeah, so this is how weak lows are getting taken out. This is how it can get used as an, yeah.
I think the only part that maybe confuses people, although anyone can easily maybe understand internal structure and the highs and the lows and the really important trading range, and not getting confused with that, is the fact that the market is very fractal. So depending when or where they start to analyze their higher time frame, higher highs and higher lows, or depending if it's bearish, they're gonna confuse because they're gonna be starting to see all over the place on the H1 and 15 and 5
that's
and 1.
the thing.
Yeah,
that's the thing. You have to pay attention to these points. Okay, not this, not this.
Now usually, for as a matter of question, Udara, is from your personal experience, what would you say as a possible maybe intraday or even like midterm or short-term swing kind of trader, like holding a trade for 1 or 2 days, depending again on the higher load that must be taken or the lower load that has to be taken. What do you usually like to start as a higher time frame analysis, like the daily or the H4?
For me personally, you won't believe it, I'll start from the weekly. Okay, I will always start from the weekly. Okay, because that shows you where that will really give you a proper directional bias.
Okay.
Always start from the higher time frames, weekly or the daily. Now, sometimes the weekly isn't clear, and you don't have to always look into the weekly like every single day. It takes 5 days to make a weekly candle. So why should you look at it every single day? No,
it's gonna be
on the weekends.
Remaining.
Yeah, on the weekends, if you could get a bias for one single weekly candle, you have the bias for the whole week. That's it. So sometimes you might be wrong, but sometimes if you get that, okay, trust the bias, and then until Friday, you can just like if you're assuming it's gonna be a bullish week. Now you're not gonna guess. Okay, you're not gonna guess because you can't guess anything in the market. Okay, you have to base it on facts. Now, if everything tells you that the market is gonna go up today, okay, until Friday you're selling. Until Friday you're buying it. Okay, until Friday you're gonna buy it. Okay, so you can do something like that. So yeah, I will show you. Okay, I'll show you how I do a top down. I'll show you how I do intraday to swing. Okay, I'll show you how I do intraday only and all of that stuff. Okay, I'll show you. Okay, so yeah, this is how we understand the trading ranges properly. Okay, so you get it, right? I hope it's clear.
Yep.
Yeah. Okay, then yeah, same thing. Gosh. Okay, same thing in a bearish market. Okay, same thing in a bearish market. Let me refresh. Price action is actually very interesting if you know how to read it.
Yeah.
Yeah.
It's beautiful. It's beautiful actually.
Yeah, it's beautiful. You don't want any indicator to give you a direction or anything. Okay, you don't want anything. Okay. So yeah, now after every single breakout structure, a new trading range will get created. And then what you're going to do is look for discount and premium prices like this. Okay, and since it's a bearish market, we're going to look for sells, right? So we will anticipate price to get into a premium. Okay, so anything above the equilibrium before falling back down. Okay, so a high probable bearish point of interest will always come from the equilibrium or as anything above that. Okay, anything above that. Okay, it can come from anything above that. So then let's say it's going up. Okay, now what's the other reason they're going up? It's to take out the internal range liquidity, the liquidity that is resting inside of this trading range. Okay, so price might go up, clear out the internal range liquidity, or else they'll take out the buy stops. So keep in mind, a bounce in a bearish market is a hunt for buy stops. Okay, so they go up, clear out the buy stops, takes out the internal range liquidity, and then they'll come back down to take out the external range like this. Okay, so this is how the lower highs and lower lows are formed, but how do we confirm it? So let's see. Okay, so let's say price went, yeah, let's say it went into a premium price and it gave you the strong high formation, stop hunt, and a breakout structure. Okay, confirms the strong high. And then, okay, let's say now price is gonna come back down. Okay, it is gonna come back down like this. Okay, so only after you get a break below this low, you can confirm your trading range from, yeah, you can confirm that this is the high of the trading range. Okay, you can confirm that this is the high of the trading range. But how do you confirm the low? You have to get a break of structure in the opposite direction like this.
Yeah.
Okay, so like this. Now, what you can do is, since price is fractal, okay, you can go to a lower time frame, discount and premium, wait for it to come down, build an inducement, buy below that, and you can target, okay, you can target the higher time frame internal range liquidity maybe.
Yeah.
Okay, now this will be very slow. Okay, this will be very slow because why? It's a retracement only.
Yep.
Okay, it's a retracement into the strong high. Okay, but keep in mind, if you're taking a buy here, do not just directly target the do not just directly target all of the internal range liquidity, because it can anytime tap into the equilibrium and then drop.
Yeah.
Okay, so it's always safe to get your partials from somewhere, pay yourself. That's the most important thing. Okay, so yeah, now let's assume it went up into the premium price, gave you a breakout structure, inducement, and then sell it like that. Okay, so you can do this ping pong stuff if you know the proper trading ranges. Okay. Yeah, no, it's not that clear as a drawing. Okay, but yeah, let's see how we could do it on the charts really. Okay. Okay, so we have that. And then again, let's assume something like this happened. Price has come down and gave you a break here. Okay, let's say it gave you a break here. So now your current trading range is still from here to here, and your major breakout structure was still a bearish one. So this was only a minor bullish breakout structure. Okay, so now this lower high has to create a lower low, right? But this lower high has failed to create a lower low. So then this turns into a weak high. Okay, this turns into a weak high. So if that is a weak high, it will get taken out, right? So most people will be looking for sells from these areas. Okay, they'll look for sells from these areas and get stopped out. So what we are going to do is, we're not going to look for anything around here. We're going to look for something.
Mostly if they're looking at the trend line liquidity right there, they're like, they're going to get so high.
Yeah. See that? A trend line liquidity being fed into this area. But even then they'll get stopped out. And then they'll come up with some more things. They'll say that, okay, now this inducement stuff don't work out too. Okay, but no, everything works out. Even trend lines work out if you use it the proper way. That's the thing. Okay, anything works out. All you have to do is use it the proper way. That's it. Okay, so yeah, now price can go up. and sweep this liquidity right here. Okay, so where are we currently at? If this is the trading range, we are in an extremely premium price, right? An
Hmm.
extremely premium price. So yeah, that's like a VIP pricing for the institutions. Okay, so they do not want the retailers to enter here. So once they get into these extreme prices, they will quickly push down.
Yeah.
They'll quickly push down, and